morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, April the 10th. Well, we had a little bit of a surprise yesterday from the Federal Reserve. They came out with a surprise FOMC minutes. So they actually met without any of the market participants knowing. None of us knew. And then they came out with a statement yesterday. And I'm like, wow, that was odd. That wasn't posted on the economic calendar. And sure enough, Janet Yellen, our federal chairperson, as dovish as she is, she came out being ultra dovish, excuse me, and created the risk-on rally late in the day. Because prior to that, price action was actually to the downside. It was very mixed. And it looked like the markets were looking to sell off, and really didn't give us a signal. So it was a crazy price action in the morning. Really nothing going on. Markets were chopping around, trying to move higher. Sold off within about a 3 or 4 point range in the S&P, and then sure enough, late in the day, it came out with this FOMC minutes, and then markets started to explode higher. Really not much to do. Kind of late, a little too late to really react to those numbers. Now, what happens from here? Well, we're down now 4.25 handles. We're down as much as 6.5 in the E-mini electronic session. So markets are all over the map. In a nutshell, price moving higher, low volume. Markets moving lower, high volume, not good. Obviously, we have distribution on down days, a heavier volume. So it's really just, I still think the markets are vulnerable. I don't think this is a game changer at all. However, one thing that maybe will be the dollar. I'm going to show that to you in the chart segment. So let's dive right into it. So we have the spiders. S&P, we're above the 20-day moving average and above the 8, which is constructive. But again, I think this is just a retracement rally. Low volume here on the up moves, heavier volume on down moves, as you can see. So that's really not good. The indicators are just really a mixed bag right now, chopping around all over the place. But I am going to show you two things. And there's a couple of things, and this is also a mixed bag. And I'm going to show you the yen. I'm going to put this in here. And as you can see, the yen is starting to rise now. We've been in this ascending triangle. We did break lower. Markets moved up, and all of a sudden now, yen is grabbing some renowned strength. That will put pressure on U.S. equities. And if we break out of this area here, the 200 days here, next step is really the 61.8% retracement, which comes up way up above here. And by that, if the yen actually does get up to this area, then I do think that markets are going to be vulnerable to the downside. Now, what could be a game changer is the dollar. Now, see, we have mixed picture here. So it's best to stand aside and to see what happens. Now, why am I showing you this? Well, the dollar was actually starting to rise as well, and all of a sudden we caught that 200-day. We came out of this pennant, and then we started to break down. Now we're testing that 79.40. The bigger picture is $79. Now, why? Well, I'm going to show that to you. We have a head and shoulders pattern here on the dollar. Left shoulder, head, right shoulder, and 79 is the neckline. If that breaks, that would indeed fuel a risk-on rally, right? We'll have commodities and equities move higher as well. So we have a mixed picture. We have the dollar moving lower. We have the yen moving higher. But if yen looks like it's breaking out, that would fuel risk off. But if the dollar breaks down, that'll be risk on. So I don't know. We're gonna have to wait and see how this develops. But we have some interesting developments here. Okay, and remember, relationships do change, so let's just keep that in mind. Let's take a look at the transports. Now, the transports, I'll tell you, I like in the transport sector, UPS is one of my favorites, and I do like UPS. FedEx is chopping around from their earnings, but I do think FedEx actually goes as well, but I do like UPS here in the transports. But transports need to lead, and they're doing so. But look at the volume. Volume is anemic. There's nothing going on in volume. Bigger down day volumes as we have. As you can see, volume increase to the downside and lower volume to the upside. So that's not good. But again, if we can continue to move up and transports can really gain some strength, that would look at least a little bit better. Now here's the Russell. Russell, the weakest, one of the weakest of the bunch. I think is the weakest of the 5 that we follow. Again, lower volume. Markets rolling over, momentum rolling over, and this is just really flagging into the 50-day moving average. So I do think that the markets are still vulnerable, and I do think we see lower prices to come. Here's the Qs. Now, if you want to look at anything, you got to look at the Qs here, because obviously it had brought this market lower. Now we're back testing this upper trend line from the November 2012 lows. So this is a very valid trend line, okay, and a powerful trend line which usually holds and caps any type of rally. Now we're above it right now. Let's see if we can muster up a little bit of steam here and continue to move to the upside. At least to get a 2 or 3 day rally would be nice. And then if the markets break down at the highs or near the highs, making a lower high, then that would be a signal to start shorting rallies in the marketplace and in stocks as well. All right, the diamond, same thing. As you can see, diamond's back up to this trend line support now, which is acting as support. So let's see if the diamonds can recoup. Now, diamonds held up relatively well to the other indices, so that's not too bad. Now, what's looking interesting is the solars again. Now, yes, this is a counter trend trade, so if you're not used to counter trend trading, stay away. But this is starting to look a little bit good, at least to the upper end of the range here. You made to 64, 65. I mean, as you can see, in the last 6 weeks, it's really just about sold off about 30 points here, so almost cut in half. So this does look interesting for at least a good move to the upside. Okay, but again, we need the market. If we don't have the market, I wouldn't do so. First solar, as you can see here, testing the upper end of the range. This first solar is definitely the bigger of the bunch as far as market cap, stock wise, holdings. It's definitely the one to be looking at. Now, the best trade here, and I've been saying, is USO. I like USO for a trade. Obviously, we don't want to buy it up here. Let's wait for a pullback back into this area, making a higher low. And you can look at some of the other ETFs like the OH, the service sector. I like. I do like the XLE. That's actually doing quite well. And you could dial into the ETFs as well. Look for the holdings, the top 3, top 4 holdings in that ETF, and then look at the best, pick the best stock. And I think you'll look for some golden nugget trades here. And I do think that it's going to produce some good winners here. All right, guys, and that's really pretty much it. Let's see what happens here. The markets are digesting this move to the downside and then now to the upside. And I think you're going to have some portfolio positions going from growth stocks to value stocks. And I think that's going to be the next key areas that we're going to be looking for, such as the AT&Ts, the Intels, the Caterpillars, the Microsofts. That's been in play. They do pay a higher dividend, and you're going to see some of these dividend stocks do well too, because you're going to have some turmoil in the marketplace here, because the markets are not knowing which direction to go now, especially when the FOMC threw those minutes in, now threw a monkey wrench in that short-term trend. So do we go higher or do we go lower? That's yet to be seen. We don't know now. But I will tell you that the markets are vulnerable, and I do think that the markets are overbought. And when you're coming into some weakness here now, at the middle of April ends any type of seasonal strength. We get some weakness between now and then we get some choppiness all through the summer. So you got to realize that, all right. And we're holding into some heavy areas of resistance where there's eager sellers coming in. You got to use caution. Okay. Hope that helps. We'll see you tomorrow with another report. Have a great day, everybody.